several mayors who join me on this committee. Mayor Orr from Cheyenne, Mayor Burke from Chattanooga, Mayor Patterson Howard from the city of Mount Vernon, and Mayor Alorza from the city of Providence, and also many of our special friends and partners who you will hear from. My understanding is that Mayor Barnett, our fearless leader, may be just a few minutes behind today. So with that, I will skip from the portion where Mayor Barnett is going to bring remarks. And Tom, I'm going to look for some guidance from you. Should we await Mayor Barnett's presence before we go through the resolutions and just move on to our presentations?
I think we should move forward, and when he comes in, he can give greetings. We've done that before, Gene, in our standing committees.
That's what we should do. So, we should move through the resolutions.
That's what we normally do it, Madam Chair.
Okay, well, thank you. I will move right ahead. Just to my brief remarks. As many of you all know, the city of Atlanta is the birthplace of Dr. Martin Luther King Jr. and really is known across the country and the world as the cradle of the civil rights movement. In a 1967 book, Dr. King wrote entitled, "Where Do We Go From Here? Community or Chaos?" He asked the question, why is equality so assiduously avoided? And I think now more than ever, as we see the challenges facing our country, whether it be the disparities, health disparities that we are seeing with COVID-19 in Atlanta, where nearly 52% of those who tested positive are African American, yet nearly 86% of the deaths in our city are African American. To what we are seeing with this movement that we are experiencing across this country. Now more than ever, people are continuing to cry out for equality. And certainly at the center of that is how we approach our communities with dignity as we discuss issues related to equity, and specifically as it relates to how we are providing communities and homes throughout this country where people who may not be as financially wealthy as some are still able to raise families and still access all of the resources with dignity that they so deserve as a part of this great country that we know is America. And so with that, I had the great pleasure of introducing Dr. Raphael Bostic, who is President and Chief Executive Officer of the Federal Reserve Bank of Atlanta. He took office June 5th, 2017, and is the 15th President and Chief Executive Officer of the Federal Reserve Bank. He's responsible for all of the bank's activities, including monetary policy, bank supervision, regulation, and payment services. He's a participant on the Federal Open Market Committee, the monetary policy making body of the Federal Reserve System. Also very graciously served as a part of my transition team and continues to serve as a very trusted and respected advisor of mine as a part of ACP, which is comprised of many of the leads of Fortune 500 companies and entities throughout the city. So I am grateful personally for you and also thankful that you are participating today. Our second speaker is Jeffrey Labelle. He's a director. I hope I pronounced that correct. Director of Housing and Community Initiatives and Social and Economic Policy for ABT Associates. He has expanded awareness of the important role housing plays in advancing key outcomes such as health, education, economic development, and environmental sustainability. And he's frequently called upon to share his innovative ideas for expanding the availability of affordable homes, developing alternatives to traditional home ownership, and helping low-income households advance toward economic security. And with that, just one other name I did not mention is our Chief Housing Officer in the city of Atlanta, Terry Lee, who's also joining us today and may chime in at some point. Terry is the first Chief Housing Officer in Atlanta and has really been working to help us achieve our goal of putting aside or putting towards affordable housing $1 billion, and also creating and or preserving 20,000 affordable housing units in the city of Atlanta by the year 2026. I believe we are very close to the 5,000 mark to date, and that in large part is due to the leadership of Terry Lee. And so with that, we are going to begin our conversation. And I'll kick it off with a couple of questions. Or Tom, I'm going to get some direction from you. Should I kick it off with my questions, or should I just allow Dr. Bostic and Mr. Labelle to speak?
Gene, help me with this. What have you got? Gene Lowe?
Hey, yeah, Mayor, just allow them to speak, Dr. Bostic and
thank you.
And Jeff. Okay.
All right, I'll say my questions for later.
We're gonna return to the resolutions at the very end. That's what we're doing?
Yes, are we going to wait for Mayor Barnett before we get to the resolutions?
I think when he comes, he'll bring greetings.
Well, we don't
care, and then we can continue.
Yeah, right. Yeah, he.
Okay, well,
you're right.
Since I'm all out of order, we'll just keep transitioning, and then we'll come back to the resolutions. It's been a long day and an even longer week. So
it's Friday.
When you have 4 meetings on the Friday. All right, Dr. Bostic.
And we have mayors coming on. We have mayors coming on too.
Okay.
So I guess that's my cue. So good evening, everyone. It's good to see you all. Mayor Bottoms, thank you so much for the introduction. It's really good to see you, albeit virtually. We've been in a virtual position for quite some time, and I look forward to the time when we get to sort of be in the room together. And I did want to give a shout out to Terry Lee. Terry has been a great partner and a leader in the city. And there are many mayors that are on here that are in the 6th district. And you know, I've seen Mayor Burke in Chattanooga. We got to spend an afternoon together, which was really delightful. I got to learn a lot about the city. And I just want to tell all of you that when I think about the jobs in public service that would be the most appealing, besides the one I currently have, I would love to be a mayor. And I think you guys have just a tremendous opportunity to touch people, to shape their lives, and to make people's lives better. So I want to just thank you all for your service. And I did want to just say at a baseline, you know, think about the Federal Reserve System as a partner for you. We have lots of people throughout the system and throughout the country who have expertise that can help you work with your problems. We've been trying to engage with the cities in the 6th district, which is in the Southeast, but I know we have staff throughout the country that are willing to do that. I also want to say it's really a pleasure to be on the panel with Jeff Labelle. So Jeff and I go way, way back. And you know, you get to a point where it's just a big number, and I just say, go. That's kind of where we are. But Jeff and I worked together at HUD in the 1990s, and he is a person that has a lot of ideas. So this should be a really interesting conversation. Now, in thinking about what we would do and how we would divide up the discussion, the first thing we recognize is that there's a lot to say. There are lots of different ways that you can go. So what we've decided, I'm going to go first, and I'm going to try to provide some context by comparing what we're going through now to what happened in the Great Recession, which was the last time that housing was very much at the forefront of people's discussions from a policy perspective. And I'm going to do a compare and contrast, and then close with some thoughts about things you might think about in terms of policy moving forward. So there are three main punchlines. So the first is that the current crisis was extremely sudden, and it left those with few savings extremely exposed. And so this means that the set of people who are really at risk are quite different and thinking about how and comparing to the Great Recession. The second thing I did want to say is that all the relief efforts that have been put forward actually have worked. And there's some good evidence to suggest that policy has worked and has played an important role in helping mitigate the pain and distress of families across the country. And then the third punchline is that there are still risks. And the biggest of those risks from a housing perspective is really around what happens when the relief policies expire. And we have a lot of these coming up right now. And it's a real concern that once that's out, once that's played out, all these people who are sort of in a perilous position will be really stuck and could be in big trouble. So let me just go forward now and talk a little bit about the Great Recession, because that is so present when you think about housing as policy. Before the Great Recession, people didn't really think about housing as really that important. It was sort of a sideline issue that wasn't so central. But the way that the Great Recession played out, housing played a central role. Now, books and books have been written about why this happened and how this happened. I would just say that, you know, when I was teaching, I was a professor at USC in Los Angeles at the time. And the way I described it was a period where we saw greed at every level among investors, brokers, realtors, bankers, and even the homeowners, potential home buyers. And there was very little due diligence to say, okay, you're greedy, you're going to push the envelope. There should have been some institutional structures that said, okay, things are getting a little out of hand, y'all are getting a little excited. That due diligence just didn't exist, and it didn't play out, and allowed the whole sector and indeed the whole economy to really teeter out of balance, where people were exposed in significant ways. But because it played out in the specific housing context, the result really started, the pain started in the home ownership space. We saw a lot of foreclosures. We saw a lot of stresses to the financial sectors that were investing in housing. And then that bled out into the rest of the economy in a way that meant that there was sort of a cascade of effects. So it started in home ownership, then it went to the banks, then it went to sort of real side companies and businesses. And then and so we had sort of a flow of distress that went through the economy, which meant that the loss and the pain got spread out over an extended period of time. A second thing that was really important, and it's important to think about in the terms of the Great Recession, is that the policy responses really wound up being quite slow. And they were timid, and they took a long time to stand up, which meant that for a long time, people were left on their own. And they kind of had to figure things out. We had to create a lot of structures kind of on the fly, but we really weren't right on top of it at the first moment. And that led to extreme distress. And we still have lived with that in many communities to this day. Now let's fast forward to what's happened in the last couple of months. And the thing that's really important to keep in mind here is that the current crisis we have right now is much more a public health crisis than a crisis of people taking excessive risks, right? This is a virus that came in, it exogenously hit the country, and the public health response, which is to mandate social distance and keep people away from each other, that actually has an implication for economic activity and performance. And so that close immediately just means that we're not going to be able to do business the way that we did before. And a lot of stuff is going to get shut down. And that means the cash flow stopped immediately. There was no cascading. This was sort of like you got to the cliff and everybody went over at the same time. So when you think about who's going to be at risk, it's going to be pretty much anyone could be at risk. And it'd be anyone who doesn't have a pile of savings or some capital or something to fall back on to get that relief. And so when you look across the landscape, we know that there are a lot of types of businesses and employers that didn't have 3 to 6 to 12 months worth of savings. All of them are going to be at risk. There are a lot of families that don't have savings. They don't have, there are a lot of surveys that show 40 to 50% of American households don't have $400 to deal with an emergency. So they're all going to be at risk. You got nonprofits who are always working sort of on the edge. They're going to be at risk. And then governments, as you know, because of the loss of sales tax revenue and the like, are also going to be at risk. So we have risk across the board. And so this is really a very, very widespread and broad way that pain has come through. Then the second punchline is really that relief came quickly. The Fed acted extremely fast. I like say bold and decisive. Those are my 2 words. I try to get that into every presentation I say, just so there's no ambiguity on that. But the bankers have been very supportive. The legislative branch has acted extremely quickly, and the relief really got through to a lot of parts of the economy. And if you look at the evidence, I think the evidence is extremely clear that this relief has worked. So you think about in the housing space, all the forbearance programs that were put forth for renters and for homeowners to say, you don't have to pay your rent, you don't have to pay your mortgage, we're going to forbear. And when we've talked to bankers, we talked to a lot of folks, the thing that we've heard very clearly is that there were a lot of borrowers, there are a lot of renters and borrowers who applied and said, I'm going to use the forbearance program. But then when push came to shove, they didn't use it. And part of that was because they had gotten the relief either through the $1,200 check that came through, or the extra support through unemployment insurance benefits that really provided that extra buffer that allowed them to pay and not need to fall back on that. Then we're doing some surveys right now in my bank of businesses. And one of the questions we ask is, did you apply for PPP funds? Did you get PPP funds? And did they work? Did they help you? And the answer to all three of those has been yes. It's remarkable how many companies have. Now, there's another body of evidence which suggests that relief has not actually reached everyone. And this is something that is going to be particularly important. For me, one of the areas where I think there's a big hole is really around the smallest of the small businesses, many of whom didn't have strong relationships with banks, maybe didn't have lending relationships with banks, so their credit positions weren't well understood. And the application process for a PPP then just became too much. So when thinking about that next phase of relief, one thing I would encourage all of you to think about is what role cities might be able to play to facilitate getting relief to those smallest of small businesses. At the end of the day, you guys, you and your administrations, your businesses, whose are there and what their sizes are much, much better than the federal government does. And so by thinking about maybe business licenses and the way that you track their information, there may be ways for you to be a conduit to get funds that are targeted toward relief to those sorts of institutions. So I'd encourage you to talk with your federal counterparts and think about ways that might be structured. Just so you know, there is about $100 billion of PPP money that is still sitting out there unused. It would be a real tragedy if we had a lot of businesses go out of business while there's still all this money that's still available. So we need to think about how to use that. All right, so the next question is what happens next? I said, relief is about to expire in a number of places. In some instances, it already has. So some of the eviction moratoria have expired. We know the unemployment insurance is slated to expire at the end of July. And so we have to think that there may be some real pain that might be on the horizon. So I wanted to offer 5 ideas for thoughts in terms of policy. One is that I would really encourage the reserving of funds because when this relief expires, there may be needs for renters and homeowners in your cities. And it would be good to have funds available to help provide some relief when that happens. The second is to consider support for delinquency in areas that might trigger foreclosure. So there's a lot of variation across your cities, but I know here in Atlanta, if you're delinquent on a water bill, there is an elevated likelihood that you can be foreclosed upon. And so I would encourage you to be aware of all the places where delinquency could happen and see if there is support that might be offered there as well, because many of those are small dollar amounts. There's not huge sums of money that could trigger that. The third thing I would say is this is actually a time of opportunity. There may be land that becomes available or land that is available at cheap prices today because of the need for property owners to liquidate, to become liquid and get cash. So there may be strategic parcels that are available. And if there are ways to gain control of land at this time, I think that'd be really useful in terms of having resources available for building affordable housing. When I talked to my team about this, one thing they cautioned and said we should look out for is this may be a time where some developers actually see themselves as having opportunities to push through things that might be more difficult under less crisis situations, that attention gets diverted. And so I'll just say, be mindful about that and don't let down your guard, be vigilant and continue to make demands about the important role that certain housing offers. And the last thing I would say is, as we think about policies moving forward, please be sensitive to the fact that there are significant disparities in terms of how people are living and what they understand. Mayor Bottom spoke to this. It's been in the press a lot over the last several weeks. But try to craft policies, and as policies get crafted, think hard about whether those policies really acknowledge the diversity of experiences that are going to exist in your city. And if they don't, try to push to have them be more nuanced and more helpful in that regard. I know Jeff is going to say a little more about that, but let me just stop there and I'll turn it over to Jeff. The floor is yours.
Great. Well, thank you, Raphael, and thank you, Mayor Bottoms and U.S. Conference of Mayors for inviting me to speak. I'm the Director of Housing and Community Initiatives at Apt Associates. We're a mission-driven research and consulting organization. Together with Ingrid Ellen and Mark Willis at the NYU Furman Center, I'm one of the co-creators of localhousingsolutions.org, which is a resource that we've created to help cities develop comprehensive and effective housing strategies. I want to focus, I've been asked to focus on, and I'd like to focus on the connections between COVID-19 and racial equity in the context of housing. And there are three topics I want to focus on. The first is the relevance of housing policy to racial equity. The second is the implications of COVID-19 for housing policy. And the third is just a general suggestion of an orientation of how cities can think about and approach this problem by taking a comprehensive interagency integrated approach. So first point, effective housing policy is fundamental to assuring racial equity. So I'm preaching to the choir here, so I just want to start by focusing on the importance of safe, decent, and affordable housing. It's obviously fundamental to achieving many critical social policies. To pick a few, children living in unstable housing or in neighborhoods with poor performing schools are likely to do less well in school. Children living in unaffordable housing are less likely to receive adequate nutrition. Adults struggling to pay the rent or mortgage each month are more likely to experience mental health issues. Homeownership, we know, is the single biggest contributor to the accumulation of household wealth and is necessary for a secure retirement and many other important goals. So we know housing is important, but there's a racial dimension to this. People of color are disproportionately affected by homelessness and by the nation's housing affordability crisis. People of color are much less likely to be homeowners and thus to miss out on the biggest source of wealth for most US households. People of color are less likely to live in neighborhoods with good schools and more likely to live in neighborhoods with high levels of violent crime. In many cities, people of color are facing displacement from changing neighborhoods, even as those neighborhoods become more secure with prospects for stronger schools. So if we want to promote racial equity, we will have to find a way to address these housing and community development challenges. And this will require cities to think bigger and act faster, even as you face depleted resources from this economic crisis. So now on to the COVID-19 issue. I mean, the economic crisis precipitated by the COVID-19 pandemic, it's obviously already had a huge effect. Unfortunately, my message is that effect is going to be broad and long lasting. It's not going to go away in 2 months or 3 months or 6 months. It's going to affect the affordability, the quality, and the stability of housing occupied by people in your community. And it's unfortunately the people who were most vulnerable before the pandemic, very low income people, people of color, people with disabilities, they are the ones who are most likely to be adversely affected. So you're already familiar, I know, with the short-term impact. You've had huge increases in your cities in the number of people who are out of work and cannot afford their rent or mortgage. You've faced challenges providing shelter to individuals who are homeless, given the pandemic and the need for social distancing. As Raphael mentioned, we've been fortunate to have some policies in place. So the tide of evictions and foreclosures has been held back by eviction moratoria, mortgage forbearance, increases in unemployment insurance benefit. If these policies expire before the economy recovers and are not replaced by similar protections, we will see a substantial increase in evictions and foreclosures and financial distress among rental property owners, which could lead to a decline in maintenance and the loss of naturally occurring affordable housing. Now, fortunately, even as we speak, many of your staff are working to develop policies to help reduce the incidence of eviction prevention and mortgage and tax foreclosure. In the absence of additional federal resources, programs like local rental assistance policies and developer assistance that's contingent on non-eviction will be critical for helping individuals and families remain stably housed. Few cities and counties have enough resources on their own to fully meet this need, but what you can do and what they can do will help. Once the economy substantially recovers, many of these challenges will recede, but they won't disappear. This is my belief, the economic recovery is likely to be slow and uneven, and many of the most vulnerable will continue to struggle with unemployment or underemployment for months and maybe years. There will be a need probably for several years for policies to help individuals rebuild their savings and credit scores, cover security deposits and first and last month's rent, and kind of renew their ability to purchase homes. It also seems likely that we'll see a slowdown in the rate of new construction, which could worsen housing affordability challenges in some locations. So what can we do? What can we do about it? I haven't seen your resolutions, but I hope there's a resolution there. I expect there's a resolution there calling for the need for increased federal and state action to deal with this. Terry's nodding her head, so that's a good sign. I mean, this is absolutely critical and not something that I personally can really address. But what I want to focus on is what you can do as cities on your own to help deal with this point. And my basic point here, the message is that a comprehensive interagency approach is needed to plan for and address the housing implications of COVID-19. In most cities, responsibility for setting housing policy is spread across many different agencies that often do not have a strong history of working together. If there was ever a time when we needed a coordinated approach, it is now in response to one of the worst health and economic crises of our lifetime. Here's a partial list of the local agencies that affect housing affordability and quality. A housing department, planning department, zoning commission, economic development agency, probably have an agency responsible for taxation, agency responsible for building permits and building inspections. There's the homelessness system, which could, you might have a Department of Homeless Services, or there could be a different agency that is the lead agency for the continuum of care. Probably a public housing authority that's not a city agency, but is also active in your community. Some cities also have a housing finance agency. I mean, it's just one agency after another. They all do incredibly important work. But in the typical city, these agencies conduct their work mostly independent of one another. And there's no overarching strategy guiding their work and no organizational structure to nurture, facilitate, and if necessary, require collaboration. Now, this is starting to change. At least I've seen, I would say, over the last 5 to 10 years, a real growing sophistication in the tools that cities are bringing to bear. A growing number of cities are starting to develop comprehensive local housing strategies that establish clear objectives, marshal the resources of all the agencies in the city that affect housing quality and affordability to advance these objectives, and identify metrics and goals for tracking progress. The city of Atlanta, under the leadership of Mayor Bottoms, provides a great example. Mayor Bottoms appointed Terry Lee as the chief housing officer, establishing an organizational structure that facilitates collaboration across agencies. That collaboration under the leadership of the mayor and Terry led to the One Atlanta Housing Affordability Action Plan, a comprehensive strategy designed to create or preserve 20,000 affordable homes by 2026. Now, I know Atlanta's not the only city making progress and thinking more comprehensively and strategically about their housing challenges. Many of you represent cities or counties that are also making important strides towards developing more comprehensive solutions. Cities that have established this kind of collaborative working relationship across agencies are better positioned to respond quickly and effectively to the challenges posed by COVID-19. For cities that don't yet have this tradition, COVID-19 provides a timely opportunity to start or deepen interagency working relationships. At Local Housing Solutions, we are urging cities to develop COVID-19 housing response strategies that anticipate and address the full range of housing challenges posed by COVID-19, including short, medium, and long-term challenges. It's my hope that cities that do this will not only be better positioned to respond to the housing implications of COVID-19, but will establish patterns of interagency collaboration that carry forward into the future, laying the groundwork for a stronger and more strategic response going forward. Since our time is short, I won't go into details, but it instead would encourage you to visit localhousingsolutions.org, or I'm happy to discuss further during the Q&A or on a follow-up call. Thanks again for the opportunity to speak, and I look forward to the discussion.
And thank you both for those great presentations. And Jean or Tom, I should have introduced Mr. Butterbrook before we went into these presentations. I want to be respectful of his time. Do you want me to go to his introduction or allow for the questions and discussion with with Raphael and with Jeff?
Let me just ask, Mr. Butterbrook, your time, how's your time? Can we have the discussion with the last two speakers and then proceed to you?
Please do.
Okay?
Thank you. My apologies.
Okay.
All right. And to facilitate the questions, should people populate them in the chat, or will you all recognize them and pipe them in?
Yeah, the mayor's on the committee here, and there's several now on here. They can speak right up and ask questions and join in the discussion.
Okay.
Okay.
And
I was going to say, any of the mayors who are not on video and want to ask a question, if you want to just hop back on video and turn on your microphone, you can feel free to ask.
Well, I'll start, and thanks for those presentations. I think one of the things that I think we're struggling with, and I'd be happy to hear from anybody's ideas about this, is if you talk about a fiscal cliff, an extra $600 a week in unemployment compensation benefits. Tennessee is one of the only states that doesn't have a minimum wage. And so I've been doing the calculation. If you make the federal minimum wage $7.25 an hour, and you get an extra $600 of a week, that's the equivalent of working another 82 hours a week. And so when that goes away in a month, if that goes away in a month, we're already seeing a housing crisis, and that can accelerate. On top of that, like a lot of places, to your point, Dr. Bostic, I know many of the other mayors on this, we started a local business fund to help those 1, 2, 3 person businesses, not just the 150 person businesses. And we put several $1 million into it, like I'm sure other people did. But this year we just passed our budget, which had a huge budget decrease in it because of COVID as well. So if you have, I think, working on these, how do we work on these longer term issues when, as we're seeing declining revenues without some kind of federal relief in the form of the HEROES Act or something similar? Because the money piece, anytime you're talking about land and you're talking about, some kind of economic sector involvement, private sector involvement, being able to work on this in declining revenue is particularly difficult.
So I think that's exactly right. And, it's one of the challenges that we face. The affordable housing problem in general is both a short run and a long run problem. And, one of the challenges is, how do you use limited resources to try to make progress in both fronts? Jeff talked a bit about sort of just organizational coordination that could lead to efficiencies. So you make sure that all your priorities for your agencies are pointed in the same way, that same direction. That's a long run issue. But we have a sort of an unprecedented acute short run issue in that is like everybody at the same time is going to hit this cliff, because it's the day that the thing runs out, that's the day everyone has a problem, right? And most times we don't have that kind of issue. So finding significant lump sums of money to deal with the short run so that just doesn't overwhelm everything else. Because if the short run gets overwhelming, then we're not going to think about the long run, right? We got so much short run is going to be really important. So this is where, I do think finding creative ways to get the attention of policymakers is really important. And like at the Fed, one of the things we're working on a lot now is storytelling, and trying to find ways to tell stories in ways that can capture the attention and understanding and empathy of people who might not ordinarily have that kind of appreciation. This is one where I think that could be quite important, particularly, as I'm reading the tea leaves in the Senate, where there seems to be far less attention and maybe it seems like a less appreciation of the acute potential nature that we have here. And so finding ways to articulate that and describe it in ways that are compelling are going to be quite important. I do worry about this mainly because, landlords have bills too, right? And this is one of those where it is not as if we have someone who's sitting out there with a lot of extra resources they can just sort of forbear for everybody. And so we need to make it clear that this is an us problem collectively. And I'm talking too long here, but I've talked to a bunch of landlords and they're like, I don't want to evict anybody in this climate anyway, right? We've got high levels of unemployment, and me kicking out someone who used to be a good person because of this once in a lifetime event just doesn't seem like it's in my best interest. That's what they're telling me. So that's another part of the equation that I think is really important, to make it clear that this is more than just about the renters or the homeowners. This is about a chain of relationships that all could be damaged. And very early on in this, people asked me, is this going to be another Great Recession? And I said, we're working really hard to make sure we don't have that same experience, right? And I think a lot of the relief that's happened thus far has done a good job to make sure that doesn't happen. It'd be a shame for us, in my view, to stop there and then say, okay, let's hope that the time works. If we learn things, I think it's incumbent upon us to take that on in terms of our decision making.
Yeah. Let me add just one thing. So completely agree that ultimately we need more federal resources, and we need to figure out how to get the attention of federal policymakers, because the last thing we need is to have massive foreclosures and evictions throughout the country. We are seeing an increasing number of localities developing rental assistance programs. So that's one thing to look at. Another issue that I think has not been explored as much is the fact that its borrowing costs are very low right now. And if we could figure out a way to restructure some of the financing that the rental property owners have, so that they have a forbearance that basically pushes just like a homeowner right now doesn't have to pay their mortgage, and their mortgage payments get tacked on to the end. To the extent that can happen on the multifamily side for renters, right, where they don't have to pay their mortgage for 3 months or 6 months, and that gets tacked on at the end, that can be a really important solution. There are federal policies that encourage that or require that for federally backed mortgages, but on the multifamily side, it's a much smaller share of the overall pool than it is on the single family side. So there's some creativity that needs to happen, and we need to think about really how to kind of develop the product and get the capital markets to buy in.
While we're waiting on someone else to chime in, I do have a question. Any consideration or thoughts on guaranteed monthly income, especially as we're speaking about how people are struggling right now?
Raphael, do you want to take that one?
No, I'm going to let you have the,
Okay.
have the first step of that.
Yeah, no. So this is an idea that's been around for a long time. And one that I think is getting talked about more than it has been in quite a while. I just saw a paper that the city of Newark issued where they're developing a pilot program that they want to issue to test this idea. So I think it's a really intriguing idea. I don't think this is the right time, I would say, given the crisis and given the fact that everyone can't afford their mortgage and we need the money really to keep people from being evicted. But I think I would encourage us to think big about the future, about what is the right way to ensure that American households are resilient. How do we build that resiliency? And guaranteed minimum income is certainly one of those ideas that should be tested.
Well, Michael, Mayor Tubbs, mayor is in California, is leading this inside the Conference of Mayors with his program. Gene, we're aware of that. It's over into the other committee, but he's sort of the poster child on that guaranteed income. Mayor Tubbs out in California, Michael. So he's trying it.
Yeah, and we've been talking a lot about it, and that's what prompted my ask. Just something I've always wondered with it. If someone knows that someone's getting an extra $1,000 a month, do they then, up the rent $1,000 a month, or do they? Do you get into a situation where you begin to spend other people's money and make assumptions that they have $1,000 a month and therefore it can go to a mortgage when it may need to go to medication or, so I was just curious about your thoughts on that.
Yeah, I think this issue of the interaction between whether it's a guaranteed minimum income or it's a minimum wage, between that and housing costs are really important. You don't see, for example, in this discussion around the minimum wage, any thought to what implication that may have for housing costs, right? So if all of a sudden everyone has $10,000 more a year and we don't have any more housing, and we're in a market that we're with a really tight supply and we don't have the ability quickly to increase the stock, one thing that might happen, just as you suggested, is that the landlords just might raise the rents, right? And so we have to think about, I would say that you'll have a very different reaction, I would say, in a city with an ample stock that needs to be replaced or upgraded. You will see an investment in the housing stock, people buying homes. I mean, it's going to be very different in a Cleveland than it is going to be in a Boston. But very important, I think, to think about that interaction, and to the extent that you all think about, as a Conference of Mayors, cover all these issues. Would love to see more of a concerted effort to cross-fertilize the conversation around minimum income and guaranteed income and housing prices.
As the chair indicated, several of us are working with Mayor Tubbs, signed on this week onto an op-ed to move that discussion forward. It's amazing how it didn't catch on with a lot of folks. Michael's been in this space for quite a while, but I think some of our experiences over the last several months have given it a lot more credence. So, but you couldn't be more right. The interdependence and interconnectedness of all these issues and how you pull it all together, presents an exciting opportunity.
Mayor Patterson Howard, I think, has a question.
So thank you so much, Chair Lance Bottoms. One of the things that we're looking at here in Mount Vernon, and that we've done over the years in Mount Vernon and Westchester, is during crises not like these, but in critical times, expanding something that we call shallow rent assistance. Of course, Section 8 is deep subsidies, but shallow rent sometimes for families can be anywhere from $200 to $500 a month. Is not a full deep subsidy like a Section 8 or a continuum of care, but it is enough to kind of help. Sorry for the fire engines in the back. It's just enough to kind of help deal with maybe water bills, electricity, food, And this rent is paid directly to the landlord. So it really doesn't increase a person's income. So it doesn't make them ineligible for anything, but it takes some of the fiscal stress off of their household and keeps them from being precariously perched on the brink of homelessness. So, you know, if you're able, instead of giving, you know, families $1,000 to $1,500 a month, you can service 2 to 3 times the number by giving them a smaller subsidy and just enough to provide some economic relief. It allows you to serve more families, and it allows that money to go a longer way. So that is something that we have been doing. I think I was the former director of the Housing Opportunities for Persons with AIDS program going back to 1995. And when they gave us a small amount of money to provide deep subsidies for families, we tripled the number of families we were able to serve and received a certificate from HUD to be able to do shallow rent assistance. HUD usually does not fund anything short of a deep subsidy, but over the past 20 years they have, but it's still a program that little know about, but we can utilize it, and it just really helps to expand the work.
Well, I think that's wonderful, and it is very much in line with what I was saying before. And for many families, small sums of money are big means of assistance. So, you know, just trying to make sure that we don't have a one size fits all, that only one way to help people can help us really get to as many people as we possibly can.
I mean, the same $2,000 that we might throw at a family that will help them get through this month. If we split that up over several months, it'll just push them further along the way. We're dealing with the courts opening back up here in New York in another 2 weeks. And so we're working with our legal services and our courts to provide eviction prevention monies with our CARES monies that we received as part of the stimulus package. But we also want to create, like you said, a longer term solution, because we know it's going to take a while for some people to go back to work.
Are there any other questions? All right, well, thank you all for a great presentation and such a robust discussion. This is very helpful, and I know that both Terry and I were taking notes as you were speaking, so we appreciate it. All right, and I am going to go back and to another special guest, Mr. Butterbrodt, and my apologies for missing this on the front end. As many of you all know, the U.S. Conference of Mayors has a productive and longstanding relationship with Wells Fargo. And Mr. Bob Butterbrodt is the Senior Vice President and Director of Local Government Relations for Wells Fargo. He manages engagement with local government representatives in the Minneapolis-St. Paul region. And today he's going to speak on housing assistance for customers and announce the next round of Community Wins program.
Madam Chair and members of the committee, can you hear me all right?
Yes.
Thank you. Well, first, let me acknowledge the extraordinary circumstances that each of you are facing these days. You know, COVID has challenged leaders in every organization across this country and the globe, but I think few have had the added challenge of leading in a time when you are doing this very publicly and often with second guessing from many members of your community. So really appreciate the strong leadership that all of you are showing through this time. And then you add to that the global movement that's followed the tragic deaths of Ahmaud Arbery, Breonna Taylor, George Floyd, just miles from where I'm sitting now, and others before and since. And you clearly have a very full plate of public issues ahead of you here. So I just want to say the team here at Wells Fargo is with you in this time, and we are focusing on the many ways that we can work with our customers to help them manage through the challenges that they're facing, along with you in our communities across the country. Some of the highlights I wanted to just raise for members of the committee today, some of the actions that we've taken. We have suspended residential property foreclosure sales, evictions, and involuntary auto repossessions. We've been offering fee waivers, payment deferrals, and other expanded assistance for credit card, automobile, mortgage, small business, commercial, and personal lending customers who contact us. We're also helping to get dollars into the pockets of customers and others. As Dr. Bostic talked about some of those federal programs that have been so effective right now. Some of the small changes that we've made are that we're cashing government stimulus checks for customers and for those who aren't. We've not charged fees for those who aren't our customers, and we haven't withheld dollars to offset the fees, but negative balances for those who are our customers. We've talked a little bit about the PPP program, and I think we've talked a little bit about some of the small businesses, particularly those that are smaller, the truly small businesses that many are worried will be left behind by these recovery efforts. So far, Wells Fargo has submitted more than 226,000 PPP applications to the SBA. And of those that have been approved for processing, more than 80% of those are for companies that have less than 10 employees. So we've been very focused on trying to drive those funds to those small businesses in our communities that we know need them the most. And then one point on that, and we'll have more to share on this later, but Wells Fargo will be giving away all the fees received from the PPP loans to help further help small businesses in communities across the country. I do want to point out one thing, one thing that Dr. Bostic talked about that really stuck with me was that businesses and customers who are able to sit on cash right now are going to weather this a little bit better. And we did see that immediately before many of the cities and states started shutting down. Anybody who had the ability to draw on a line did. And we, in the month of March alone, we saw about $80 billion in lines of credit draws that came from our business customers. So that's helping them to get through. And I think a lot of these stimulus programs are helping those who weren't in that position to do that. But I think one thing that I would ask of all of you, and this was similar to our requests back in 2008 and 2009, as you are asked by constituents what they can do if they're facing financial difficulty, if they have a relationship with a lender, I would just strongly encourage them to reach out and talk with their lender. We are, as we've heard others on the phone say today, we aren't looking to kick people out of their homes or to have their businesses taken away. It's in everybody's best interest to try to keep people in their homes as long as possible here. So if somebody's facing challenge with payments, we really need to talk with them. We are doing everything we can to reach out and work through payment deferrals. And for mortgage customers in particular, we've got up to a year right now that we are pushing those deferrals out. But we really do need to have conversations with them about what those options are. And I think as Mayor Lance Bottoms referenced here, we are excited to announce another round of the Community Wins Grant Program. That's been a long-time partnership with the U.S. Conference of Mayors. The application for that actually went live just a couple weeks ago. And those, we've got $1 million that we've set aside this year that will be awarded for nonprofits who are focused on housing affordability initiatives, specifically that focus on projects to address housing affordability, the availability of affordable rentals, transitional housing, as well as sustainable home ownership. So as a member of the U.S. Conference of Mayors, mayors are required to supply a letter of support for up to 3 initiatives or programs in their community. And information about that program is available on the U.S. Conference of Mayors website. We can certainly follow up with information about that with members of the committee and the full conference following this session. The application will close on October 9th. So you've got a fair bit of time still to work with those nonprofits in your community and submit those applications. And we look forward to announcing the winner or the winners in the 4 different categories: metropolitan, large, medium, and small cities at that January meeting in DC, hoping that we're all able to gather there.
Thank you very much. Great. So, Jean, I am going to go back to the resolutions. Is that right? All right, I'm going to assume that's right.
Yes,
Okay.
yes, Madam Chair.
So what should have been the first item of business, were this not on a Friday evening, I would have gotten it right the first time around, but I'm going to come back to the resolutions for consideration. And new resolutions will be considered only after consideration of the proposed resolutions. At this time, I will ask members to identify any new resolutions that will be presented. Are there any new resolutions for presentation? All right, there being none, we will consider the proposed resolutions under the USCM rules. Mayors can add their name as a co-sponsor of any resolution through the community.usmayors.org website or directly on your mobile app until Tuesday, June 30th, when the resolutions are considered by the executive committee during the business session. Using the same website or app, mayors also have until noon on June 30th that's Eastern time, to register the no vote on a resolution that passes in the standing committee today. This option is available only to members of the standing committee in which the resolution passes. The question is now on the approval of the proposed resolutions that have been distributed to you. And over the last several years, the proposed resolutions have been considered as a group. We will do the same during this meeting. According to the rules, any member has a right to remove any of these resolutions for a separate consideration, which would then be debated and put to a vote individually. Would any member like to have any of these resolutions considered separately? If so, please name the resolution. All right, and there are no further resolutions to be pulled. So if there's no objection, the proposed resolutions that have not been pulled will be approved as a group. Are there any objections? All right, there being no objections. I'm sorry, did someone want to speak on one of the resolutions? All right, if there's no objection, the resolutions are adopted. And there are no poll resolutions and there are no new resolutions. And I think that concludes it. Is that right, Mr. Parliamentarian?
Yes, Madam Chair, just please announce that the resolutions have been adopted.
All right, the resolutions have been adopted.
Thank you.
All right, thank you. And does that conclude our business for today?
Madam Chair, if I may, I believe that our president has arrived and is ready to give the last word finally.
All right, thank you. Welcome, Mr. President.
Please give him a time limit, Madam Chair.
We're gonna meet at the virtual bar after this is over.
Is that time limit already done, Mayor Benjamin? I think
yeah,
no,
it is.
I'd already be done.
I move adjournment immediately.
Nobody takes the last word from Mayor Bottoms. I know that. Good to see that the drinking committee is alive and well. Obviously gave you guys a 4 o'clock start for a reason. Hey, listen, you're the last of 10 committees. Mayor Bottoms, you're amazing. Thank you for your leadership. Love watching you lead seemingly on CNN about every 6 hours. You've done a great job and we're proud to have you here in this organization. Thank you for the leadership of this committee. It's nice to finally meet a mayor from the South that I can respect. Looking at you, Benjamin. Anyway, listen, just real quick, and you, Andy. Listen, I know your business is concluded, so I'll only say this. Thank you. Thank you for doing what you're doing. Thank you for moving these resolutions, which will be considered at the meeting on Tuesday, the 30th. And then finally, just draw your attention to the meeting on July 1st at noon, where we'll have information from the conference, a speech from me wrapping up the last year, and then a speech from Greg Fisher launching us into the next year. It's very important to understand the transition and hopefully show some support. We hope to have a really good turnout there. And most importantly, as our 10th meeting this week, thank you for the work of this committee. Jean Lowe, you're amazing. Thank you for your leadership, my friend. Steady and strong for many, many years. You've been a great friend and a great leader and a great support. So thank you. And Tom, as always, appreciate your leadership as well. Keisha, thank you so much. It's been great. I appreciate the support that so many of you have shown me. With the exception of a couple of you on the screen, I really, it means a lot to me. I see Latoya Cantrell is on the line. I've learned more swear words from her than anyone else, so I appreciate her leadership as well. It's been a blast. I appreciate all of you. Have a great weekend. God bless. Keisha, back to you.
Thank you, Mayor. And I just recalled when I first became acquainted with you, we were having the senior meeting in Columbia, South Carolina, when Mayor Benjamin, who by the way was not as good of a president as you are, was hosting us. And you and your team were very confused walking through the airport that everyone was speaking to you. So hopefully you've gotten a little more accustomed to the Southern mayors in the Southern cities during this year.
You know, they're not all bad. And Keisha, if I had $1 for every time someone said that about me and Steve, I'd be a rich man, I tell you.
Okay, that's enough.
Thanks, everybody.
I'm trying not to throw up.
Thank you all. It's been a pleasure serving with you, Mr. President. You've been an incredible leader, and to all of you all, have a great weekend. Thank you.
Keep laughing.
Thank you.
Man, we need it.